GDP numbers just came out for the third quarter and they plummeted compared to the recent trend. And unfortunately, the expectation right now is that's going to even continue into the fourth quarter. I've got an update coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, take a look at this. This is a report from the Atlanta Fed GDP Now system, and there's all sorts of disclaimers on this. This is not an official reflection of GDP, blah, 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 but it is a system that they're using to try to anticipate or project where is GDP right now. Right now, not looking backwards, right now. And I'm recording this video on the day that we found out the actual GDP results for the third quarter, but that's a month late. So the Atlanta Fed came up with this GDP Now forecast to say, okay, where do we think GDP is right now? Okay, so following the economic shutdown and how annualized GDP just plummeted, okay, we had a strong recovery for that first quarter out of the shutdown of, over 30% annualized GDP, and then just under 5%, and then over 6%, and then 6.7% for the second quarter. And as estimates started flowing in from experts and from this GDP Now system for the third quarter, all right, it was expected it's going to be 6% or above. It's going to stay on that trend. And that GDP Now tracker, then that was in August. By September, it had dropped to 4%. By October, it had dropped to just over 1%. And by the latest reading, the reading right now that came out on Monday, this is not, this is what we expected GDP to be for the third quarter. It's what their system is revealing GDP is right now, 0.2%. Guys, that is staggering and could actually suggest we are in a very tricky time or heading towards a very tricky time called stagflation. I'll explain that coming up, but a little bit more. So GDP numbers, the actual GDP number that came out for today for the third quarter of 2021 was 2%. It's 2% annualized growth rate. Again, this is strong, okay, great, but it is far below the recent trend that's been, above 6%. And when you combine that with inflation, get to that in just a second, creates a little bit of a concern. Now, why has GDP fallen? All sorts of questions. Are prices just growing, rising too rapidly where people are saying, I'm not buying? Do we have way too much supply chain issues and, tankers floating around in the ocean not being able to get to ports? Very possible, okay? And I actually think if that's really the cause here and the consumer can hang on and businesses can manage appropriately their finances, gosh, that might actually mean this economic recovery can last even longer than originally projected. Things might not overheat because there's a delay in the supply. That might be helpful. We'll just have to see. If you take a look back at this GDP Now graph, this chart, look at where GDP Now, expected GDP was at the end of October, or excuse me, at the end of September, which is the end of the third quarter. Right around 2%. And that's where the actual number came in today. And so to me, it is alarming that the Now forecast, where they expect GDP is today at the end of October, is a mere 0.2%, and how different that is from expectations out there. So I mentioned some financial experts are concerned about stagflation. Now that's a fancy term, and this video is not. That's not the focus of this video, so I'm not going to define it and all of that, but it's essentially this very tricky economic situation where we have rising prices and slow economic growth. Rising prices, so there is inflation, but the economy is not going anywhere. And this is a very tricky time. Now, I'm not going to tell you, yeah, guys, we are in stagflation right now. This is a very dangerous situation. I'm not there. There's a lot of financial folks, I'm sure you can find them on YouTube, that are there and are waving that flag, either for clickbait or whatever. I'm not there yet, but I have been talking about this challenge, and that challenge is we are at, so, okay, let me try and connect all these dots. The stock market and the value of a company's stock is based on that company's earnings, but the expected earnings in the future, okay? Well, those earnings right now are record high. They're record high. So any distortion in those earnings, meaning if prices go up or if expenses go up, geez, those profits could actually start going down. And what would that then do to the overall stock price? If we're seeing inflation, and if we're also seeing way too many job openings for available unemployed workers, that could push, if inflation's out there, that's going to push prices up, push expenses up. If wages, if there's a labor shortage and wages start going up, that's going to increase expenses and put pressure on profits as well. All at a time when inflation is happening, that could start eroding economic activity and actual profits, and therefore cause some problems in the stock market. So I've made that connection several times. I'm still not to the point where, guys, okay, we're there. This threat is real. I'm just saying, you know, those seeds have been sown, and it looks as though that could be a significant problem ahead. Hopefully this GDP forecast of right now, it being 0.2%, is truly, the demand is strong, consumers are healthy, businesses are strong, they're adapting to rising prices, the labor shortages are getting worked out. And because of all of that strain in the economy, the GDP is temporarily slower and it's going to emerge back up. I hope so. I'll be watchful for that. Check this GDP Now system from time to time. I know I'll be talking about it here. So what do you do with this information? Number one, make sure your financial house is in order. It's not a time to get too greedy, okay? I've given that warning several times over the past several months. While things are hot and there's sort of panic buying happening, not a time to get too greedy. Make sure that you've got a strong financial situation, full emergency fund, updated budget, that you're being careful and conservative with your financial foundation, okay? And then second, make sure you're investing at a risk level that's appropriate for your situation. Had someone reach out to one of our CPAs recently and talk about, well, I've got this money sitting aside. I'm probably even going to need it maybe in 18 months or 24 months, something like that. Should I invest it in the S&P index? No, if it's short-term money, you got to invest it for the short term, not taking wild amounts of risk. And so make sure your entire, that's one example, but make sure your entire financial situation is connected to the investment structure, your investment strategies, so that you're not taking disproportionate amount of risk, just in case we do see a surprise manifestation of stagflation or growing concerns about that, or a slowing economy that persists longer than any of us would want. Work with your CFP on that. If you don't have a CFP on your team, you can find one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.